news for business people.
Good morning, this is Daybreak on Bloomberg Quint Live and I'm Alex Matthew. Thanks for joining in. Let's go straight to the headlines. It's a muted start to the week for Asian markets as volatility remains high. Prime Minister Narendra Modi is attending the ASEAN summit in Manila right now. He is expected to hold talks with US President Donald Trump and Japanese Prime Minister Shinzo Abe, among others. Brokerages give their thumbs up to Axis Bank's 11,600 crore rupee fundraising plan. L&T beats estimates in the second quarter but cuts order inflow guidance for the full year. Coal India misses earnings estimates for the sixth straight quarter in a row as high raw material costs weighed on margins. Let's move to the international markets now, and major US stock indices closed lower on Friday as they snapped a multi-week winning streak. Bloomberg's Junie Hyman has all those details.
The major averages in the United States having their first simultaneous weekly decline since September 8th. They had been on quite a winning streak, an 8-week winning streak for the S&P 500. But things appeared to change as the tax reform debate heated up in Washington. Investors were paying more attention, and it was financials who took the hardest hit on the week and helped drag down those major averages. Now, in terms of the session on Friday, it was healthcare and energy shares that fared the worst, energy falling along with oil prices in the U.S. On the plus side, both consumer staples and consumer discretionary had a stronger day and mitigated some of the declines. Now, up for the week, more tax reform talks will be ongoing in Washington, both in the House and in the Senate. It's expected that perhaps the next version of the bill will progress beyond committee to the full floor of the House and the Senate. And of course, market participants will be paying more attention to the details of the various bills, including the issue of corporate tax cuts and whether they will happen in 2018 or perhaps 2019. That's among the many different tax-related issues that will be of interest to the market. On Wednesday, the next round of NAFTA talks are set to kick off, this time in Mexico City, between Canada, the U.S. and Mexico. And on the earnings front, we in the U.S. getting to the end of earnings season. A lot of retailers, however, are yet to report. We heard from the department stores last week. Now it will be some of the big box retailers' turn. That is Home Depot, Target, Walmart, and Best Buy will be giving their read on the last quarter and also perhaps a little bit of insight into their forecast for the holiday season. Julie Hyman, Bloomberg, New York.
Well, that was the update from the US, but Asian markets have opened lower this Monday, with the three early openers in Australia, South Korea and Japan all losing ground. The Nikkei is the biggest loser, in fact losing more ground than it did in early trade. It's down as much as 0.8% as of now. Later today, also watch out for India's consumer price inflation data for October. That'll be out this evening. The CPI, according to the consensus Bloomberg estimates, is expected to rise to 3.45% from the reading of 3.28% in September. Darshan Mehta and Agam Vakil join me now. Good morning, guys. They're going to give you the trade setup for the day, and also they'll tell you what's happened in the futures and options space. Darshan, first to you, what's on your list today?
Good morning, Alex. Not the best opening that we can expect because the Asian markets are trading down. Let's take a look at the SGX Nifty because that will give us an indication of how we'll open. So it'll be muted. It's down 14 points. We still have almost 2 hours to go. So that's the broad cues that we're getting. As far as the ADRs are concerned, the ICICI Bank ADR ended up almost 1.8% higher, but not so much well for Dr. Reddy's and Tata Motors because Tata Motors was down almost 2%. Dr. Reddy's was down close to 1%. As far as crude is concerned, crude dropped almost 0.6% on Friday. It's trading muted in trade currently. The WTI drops below the $57 barrel per mark in trade today. Base metals ended mixed on LME because what happened was zinc was up almost 1.3% higher. Aluminium was up almost close to 0.5%. What didn't do well was nickel. Nickel was down almost 1.5%. Copper was down almost 0.3%. Currently, COMEX copper, the start has been positive, but base metals are trading absolutely muted in China currently. Base metals, you have your rubber, your steel, everything is trading muted. Gold is trading muted after a 0.8% drop that we saw on Friday. So Qs across the board are rather muted. FI sold in almost 529 crores in the cash market. That's the provisional number that came out. DI has bought in almost 1800 crores in the cash market. So for the month-to-date basis, if you're looking at it, both FIs and DIs are net buyers in the cash market. So FIs are net buyers to the tune of almost 9,700 crores in the cash market, includes all the bulk deals though. And DI has bought in almost 1800 crores in the cash market. Now, a couple of things that were buzzing in trade. The Nifty PSU Bank Index was up almost 4.3%, so that was the biggest gainer. What didn't do well was the energy index. Energy index dropped almost 1%. The Nifty was up, the Nifty trade was rather muted. It was up just 11 points. What contributed? SBI and L&T. L&T came out with numbers after market hours. The expectation was of a strong number. The number is strong, but the guidance cut could probably weigh in on it. ICICI did well, and Reliance over the past few days has been contributing extremely negative ever since the numbers. Tata Motors has been dropping in trade, but a 12-point very muted move. What are the FNO Qs like, Agam?
Absolutely, as you said, Darshan, we are looking at muted Qs with the Nifty still defending the 10,300 mark, and that will be crucial considering the accumulation of open interest and options in that around that mark. But starting off with the futures, we have seen is what we've seen is about a 4% increase, despite the fact there's been very little change in the Nifty index. As far as the Nifty bank's concerned, again, we're looking at another 4% addition, while a little bit more accumulation towards longs, whereas the bank Nifty has also moved up to a certain extent. The India volatility index again has moved up and now near inching back towards the mark of 13.5, so we'll be watching out for that one. And as far as the put call ratio is concerned, where very little change considering the fact that we have seen very little change in the indices themselves. But when it comes to the change in open interest, we've seen most amount of activity in the 10,300 calls and puts, as I was alluding to earlier. This indicates a little more consolidation as we move into the next couple of sessions. But in terms of stocks where we're watching out for, we have Just Dial, which has moved back into the band. And in terms of other stocks, we're keeping an eye on MRF, which has seen fresh longs building in with the stock moving up as much as 3.5%, OI up 21%, and Godfrey Phillips, very good earnings coming in for Godfrey Phillips. So I suspect all those who have taken longs in Godfrey Phillips will likely to have a good day of trade even in today. So we'll be watching out for Godfrey Phillips as well, Alex.
Thanks so much for that, Agam. Saloni Dhanuka is here with a check on the rupee and the bond markets now. Morning, Saloni.
Good morning, Alex. So the rupee snapped its two-day winning streak on Friday and it depreciated by 22 paise to end at a fresh one-month low of 65.16 levels against the dollar. Now, heavy capital outflows and from the local equities and some caution ahead of the key release of macroeconomic data today largely pressurized the rupee. Now, for the week, it depreciated close to 1%, its biggest weekly drop since 3 weeks. Now, elsewhere, foreign exchange reserves dropped by $22 million and it stood around 399 billion mark for the week ended 3rd November. The drop was mainly due to fall in foreign currency assets. On the global front, the dollar index snapped its 3-day losing streak, and it is now trading 0.2% higher at 94.55 levels. Now it ended 0.6% lower for the last week on the back of concerns of US tax reform policies. Also in the early Asian trade today, the pound slipped over 0.5% against the dollar on the back of a report which challenged Prime Minister Theresa May's leadership. Now, coming back home, dollar rupee is trading flat in the non-deliverable forward market. Moving on to bond markets, the 10-year benchmark yield ended at a fresh 6-month high at 6.96%. And lastly, global funds reduced their rupee debt holdings for the 5th consecutive session on Friday. They reduced their debt portfolio by close to 110 crores, according to NSDL data, Alex.
Right, Saloni, and that yield heading up to the 7% mark, so we'll have to watch for the CPI reading later today, and that will give you an indicator as to how monetary policy will pan out from here on out. But let's shift focus to the currency, to the commodity market now, and Jayesh Khilnani is here with more details. Jayesh, over to you.
Morning, Alex. So we're watching out for oil prices, which have actually declined to a one-week low. However, WTI is still trading, fairly below the 57 mark, and Brent trading just below the 64 mark. Also, that oil prices did pair last week's gains, that is for the entire week, and we understand that Iraq has now signed a deal, to export oil through Iran. So that is the positive coming in over there. But considering the fact that oil prices have run up significantly. As far as base metals are concerned, the LME base metal index declined for 2 straight sessions, that is ended Friday, and for the entire week declined about 2% odd. Now zinc was the outperformer over there, which saw an increase of more than 1%, backed by some strong inventory data. So the LME zinc inventory came down 1.5% to about 2.35 lakh tons, that is, and it touched the lowest level since 2008. We are getting similar cues from the Shanghai Futures Exchange, where most of the base metals are trading with a positive bias, but not much, just 0.2 to 0.8% for each of those metals. As far as precious metals are concerned, COMEX gold actually snapped its three-week losing streak and ended up near the 1280 mark for an ounce. Now this is backed by the dollar index that has actually declined for the first time in over 4 weeks. So these are the commodity cues coming in this Monday morning.
Thanks for that, Jayesh. Let's move on now. And Axis Bank has approved the raising of funds via the issue of shares and warrants. The private sector lender is looking to raise around 11,600 crore, and it will sell stake to Bain Capital and LIC, among others. Shraddha Babla has all the fine print of that potential deal there. Shraddha, over to you.
Well, yes, there have been multiple reports of a big investment coming in Axis Bank, in anticipation of which the stock price had run up quite a bit over the last 10 days or so. So finally, that has come in. Axis Bank will be raising a total of about 11,625 crores via equity shares and warrants. 9,000 crores will come via the issue of equity shares, and about 2,500 crores via the issue of warrants. Now, the equity shares will be issued at the price of 525, and the convertible warrants at a price of 565. Now, the warrants will be converted into shares within 18 months, and the shares will have a lock-in period of 1 year. The most important question, who's investing? Well, Bain Capital and its arms are investing a total of 6,854 crores. Capital International is investing a total of about 3,188 crores, and LIC, which is already an existing shareholder in Axis Bank, is investing about 1,600 crores. What will that mean for the financial ratios and the balance sheet? Well, it will mean an upfront dilution of about 6.6% and a dilution of 8.23%, assuming that all the warrants are converted into equity shares. Analysts are expecting the capital adequacy ratio to get a bump up of about 200 basis points, but ROE is expected to come in slightly lower by about 150 basis points. So that's the kind of impact that is expected. But broadly, this is a positive for Axis Bank, given that the fundraising of this quantum actually takes care of the growth capital as well as the provisioning needs for the bank, at least till FY19. Secondly, the entry of a global marquee investor in the bank is also seen as a confidence booster, especially after the Q2 asset quality disappointment from Axis Bank. But broadly, brokerages and what they are saying on Axis Bank, Deutsche Bank has retained a buy and hiked the target price from 575 to 620, saying that the big capital will boost confidence and the near-term overhang will fade. They also said that they believe they should provide a clear path for growth. And they believe that the issuance will help focus on growth revival. That apart, you also have Morgan Stanley on Axis Bank. They have retained an overweight with a target price of 630. They're saying that they had estimated the bank's capital need of about 4,200 crores in the base case. So they believe that the bulk of this capital raise has already been taken care of, and that should imply that the capital raising is now finally done. So good news coming in as far as Axis Bank is concerned.
Absolutely, Shraddha. Thanks for that. Let's move on to earnings now. And Larsen & Toubro reported a 27% jump in its profit for the September quarter, beating street estimates. Margin expansion led by better execution across all segments aided earnings. Darshan Mehta tracks the counter closely, and he's standing by with the details. Darshan, good numbers, but not so good news with regard to order guidance.
Yes, see, optically the numbers look good, but there are a lot of adjustments, and the clear negative will come in because of the order inflow guidance that they've cut. Now, if you're looking at the top line came in at almost 26,500 crores versus our estimate of 27,000 crore. Profit came in much higher this time around. EBITDA margins at almost 11.2% versus 9.3%. Now, let's dwell into some of the details that has come out. First of all, there was this one-time gain because of a subsidiary of 137 crores. Also, they received the compensatory tariff for the Nabha power plant. So that is something that boosted, and taxes were lower this time around. So optically, the numbers looked much stronger for L&T. Order inflow guidance, order inflow, what they managed to secure was close to almost 28,000 crores, much lower than what we had anticipated. Now, if you're looking at the segmental margins, yes, there was an improvement on segmental margins, segmental revenues. But the most important was the commentary and the guidance that they had said. So they have maintained the revenue growth guidance and the margin improvement guidance. So the margin improvement is 25 basis points. But they have cut the order inflow target for the year, given the fact that there is severe slowdown as far as government order finalization is concerned and shrinking of order prospects in the Middle East. Finally, they've said that what they've said is that they believe that the order inflow guidance for the full year could be flat compared to a growth of 12 to 14%, which could be very, very negative for the stock because the guidance on the order inflow has been cut. So expect L&T probably to open gap down in trade today.
Thanks, Darshan. And L&T's CFO R. Shankar Raman will be joining us on Indian Open at 9:30 to discuss the quarter gone by as well as the road ahead for the company. Do tune in to that conversation. Now, it has been a disappointing quarter from Coal India this time around, with higher operating expenses and a drop in other income leading to a 40% fall in profit. Let's head across to Nikki Mirchandani. Nikki, what are the key highlights that you're picking up?
Extremely disappointing set of numbers, Alex. The top line has grown by 11.7% at 18,148 crore as compared to an estimate pretty much in line with the estimate, the top line growth. But if you look at the EBITDA, which has a 56% growth at 1,230 crore, this is way lower than the estimate that we were working with of around 2,592 crore. Also, the margins for that matter, they've expanded to 6.7% from 4.8% seen in the base quarter. This is also way lower than the estimate of around 13.5%. PAT was down by 40% at 369 crore as compared to a figure of nearly 612 crore in the base quarter. This was also way lower than the estimate of around 2,000 odd crore. In fact, a growth figure that we're looking out from the profitability front. So what has led to a disappointing set of numbers? Well, the sharp jump, if I'm supposed to talk first about the operating performance, then it's going to be a sharp jump in raw material expenses combined with your higher employee expenses that have actually led to a miss. If you look at the raw material cost, that's jumped up almost 40% on year basis. Employee expenses too have risen at 9% at 9,154 crore as compared to a base quarter figure of nearly 8,400 crore. Now, this employee cost is inclusive of a provision of nearly 2,300 crore and a leave encashment reversal of nearly 900 crore. Now, higher other operating expenses combined with a sharp decline in your other income has led to a miss on the bottom line front. Other income has dropped by 56% to 610 crore as compared to a figure of nearly 1,379 crore that we were looking in the corresponding quarter. FSA, for that matter, an important metric, that's the fuel supply agreement, that have also come down to 5% YOY to 1,224 rupees for that matter. Alex.
Thanks, Nikki. Now, Bharat Petroleum is another nifty company that came out with numbers after the equity markets shut shop for the week. On Friday, the oil marketing company had an operationally strong quarter, but gross refining margins missed estimates. Somit Sarkar is standing by with the details. Somit, what are the key takeaways from those numbers? And good morning.
Good morning. Now, on a standalone basis, if you see BPCL reported, our numbers were broadly in line with estimates, with strong operations but below than expected GRMs. Now, though revenue was down 7% to 53,325 crore, net profit saw a jump of around 216% to 2,300 crore. EBITDA was also up by 188% to 3,500 crore, while margins saw an expansion of around 460 basis points to 6.6%. Now, GRM, that is a key number number for an oil marketing company came in at around $7.97 per barrel, below the analyst estimates of around $9.3 per barrel. Now, crude throughput during the quarter was highest ever and was up by around 9% to 7 million metric tons, while sales were down by around 2.5% to 9.79 million metric tons. Now, on a sequential basis, this was expected to be a strong quarter on the back of higher margins, strong volume trend and inventory gains. In the second quarter, the company reported an inventory gain of around 684 crore versus an inventory loss of around 731 crore in the last quarter, that is first quarter of financial year 2018. Now, the company also reported its highest ever crude throughput of 7 million metric tons because of the Kochi terminal. Now, the Kochi terminal utilization levels averaged around 86% in the second quarter, and the company is expected to benefit from stabilization of the Kochi refinery, and the capacity utilization of Kochi refinery is expected to go up by 90% by the fourth quarter of financial year 2018.
Right. Thanks, Amit. Now, the country's largest general insurance company, that's New India Assurance, which recently concluded its IPO, will be making its stock market debut today. Saloni is back with all the key numbers. Saloni, over to you.
So, New India Assurance, the state-run general insurer, will be listing its mega 9,600 crore IPO today. The issue price is set at rupees 800, and in terms of business, it is the largest general insurance company in India in terms of net worth, gross domestic premium income, profit after tax, as well as distribution network for the year ended 2017. Now, in terms of subscription, the IPO has been oversubscribed close to 1.2 times, with QIB subscribing over 2.3 times. However, the HNI and retail category portion was undersubscribed due to higher valuations according to a Macquarie report. Now, in terms of valuations, if the stock lists exactly at the issue price of 800 rupees, it will command a valuation of over 66,000 crore. However, if the stock lists at a discount of 750 rupees, the market cap would be around 62,000 crore. And if the stock lists at a premium of 850 rupees, the market cap would be around 70,000 crore. Now, given the market cap scenario, the price to book will vary in the range of 4.9 to 5.6 times. Now, in terms of financials, the gross premium book has seen a compounded annual growth rate of over 15% in the past 4 years, while the investment income and net worth grew at a compounded annual growth rate of 12% and 7% during the same period. Now, moving on to key operating parameters, the company has the lowest net expense ratio of 20.4% as compared to its peers, while the claims incurred, that is, the claims incurred as a percentage of net premium stood at 92%. The investment yield stood at 15%, and remember, the company has been yielding returns of over 15% since past 5 years, while the solvency ratio stood at 2.2% as compared to IRDA mandate of 1.5%. Now, when compared to its unlisted peers, it has the largest market share of 15% and highest gross domestic premium of over 19,000 as compared to other state-run general insurers. And again, the solvency ratio is highest when compared to the unlisted peers. Now, moving on to comparison with listed peers, that is ICICI Lombard. Considering the upper end of the price band of 800 rupees, the stock will trade at 75 times its earnings as compared to 48 times for ICICI Lombard. Now, on the flip side, the price to book multiple for New India Assurance stood at 5 times as compared to 8 times for ICICI Lombard. Alex.
Thanks, Saloni. Lovely snapshot of all the key numbers, and do stay tuned over the course of the day to find out how the key numbers actually stack up once the listing takes place. But Indian businesses spent the first half of the financial year facing friction on account of demonetization, and in the quarter gone by with the introduction of GST. Dousing the heat left behind by these policy changes will give India a much better macroeconomic cushion in the second half of the financial year. That's according to Uday Kotak, the Executive Vice Chairman and Managing Director of Kotak Mahindra Bank. He believes India is in a transformative phase. Listen in.
India is on a transformative phase. We are going through some frictional issues, and as you ease the friction, I think we have seen easing of friction on GST. We have therefore, IBC is progressing well. RERA also, people are settling down. So as the frictions move away or reduce over time, I think transformation will take place. And fundamentally, my view is GDP second half will be certainly higher than the first half. Private investment will gradually come in. I think it will take its time. But as capacity gets more and more used, I'm confident that down the road, maybe in the next 12 months, private investment should start moving up pretty quickly.
Shraddha Babla joins back now with all the stocks in news. Shraddha, what are the stocks on your list today?
Well, to start off with, Alex, Ipca Labs, which has won an order for the supply of anti-malarial medicines by the Global Fund, and that will be for an initial period of 3 years. We don't know what the quantum or the order amounts to, but it could be a sizable number. HSIL, which has approved the demerger of its retail and building products businesses, so it seems like there is some value unlocking which is in the works for HSIL. Welspun Enterprises is yet another stock. They've signed an agreement with NHAI for the expansion of a section of a particular highway, but the project cost of which is about 1161 crores. So you could see some reaction on that name as well. Jain Irrigation, which said that they will consider an IPO for its food subsidiary Jain Farm Fresh Foods in the next fiscal year. And we're also tracking Hudson Agro on the back of a bulk deal on Friday, where DSP BlackRock mutual fund bought 1.2% stake in the company, and promoter Chandra Mogan RG sold 2.1% stake. Just Dial as well on the back of a bulk deal, where HDFC Mutual Fund has bought 6.8 lakh shares or 1% stake in the company. So these are some of the other names we could see some reaction as well.
Thanks for that, Shraddha. And you know, we have a story on the website called All You Need to Know. I'm sure all those stocks that Shraddha just talked about are listed there. But Somit Sarkar is standing by with all the big brokerage calls of the day. Somit, over to you.
So on the brokerages today, we have as Kotak Securities and Questcom. Now they have initiated a buy rating on the stock with a target price of 1,010 rupees, which suggests a potential upside of 23%. Now Quest has created a strong platform in the large business service space. Moreover, the management of the company has a strong record of successful acquisitions with a 4 to 5 years of payback period. Now with the rise of contract staffing in India, the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 31%, 46% and 75% over FY17 to FY19. They're expecting the operating margins to be at 6% and 6.7% for FY18 and FY19, supported by both organic and inorganic growth. Now high growth, margin improvement, strong growth history, thrust on acquisitions, large size and huge growth opportunities are the positives for the stock. Now, the brokerage is assigning Quest Corp a high premium, and it expects that to sustain on given secular organic growth, strong promoter financial commitment and management track record. Now, according to the brokerage, from a long-term perspective, Quest is a compelling investment as the growth numbers do not factor in the incremental upside from acquisitions, which remain fundamental to the business model.
Thanks, Somit. Now, there's a lot to talk about over the course of the day, and you can stay tuned to Bloomberg Quint Live for all the live market action. There are also several stories that you can read on the website, that's bloombergquint.com. Here are a couple of them. Debt-laden Air India has received a loan worth 1,500 crore rupees from Bank of India to meet urgent working capital needs. This is the second time in recent months that the carrier has received loans from a public sector lender. More than 1.3 lakh Indian space enthusiasts have submitted their names to NASA to be etched on the US Space Agency's mission to Mars next year. India stands at number 3 after the US and China in terms of the number of enthusiasts. The RBI has sought fresh applications from eligible candidates for the post of CFO. This is the second time that the central bank has modified the original appointment notice that was issued in May this year. Accordingly, it is said that the last date of receiving applications from all eligible candidates will now be November 16th. That brings us to the end of this edition of Daybreak, but all you need to know is up next. Do stay tuned. This is Bloomberg Quint.